Okay, guys, it's quarter to 3 a.m. where I am. So forgive me if I sound a bit tired, but as I promised in the previous video, I need to do this. I need to share with you guys in the next series of videos how to trade the markets without indicators. It's very possible, guys, to trade the market without indicators. I know some of you have been asking in the comments, and some of you have written to me asking if it's possible to trade the market without indicators. Like I said in the previous videos, the challenge with indicators sometimes is you really need to find the perfect ones. Uh, as many of you will know, forex indicators, many of them, they've got their origins in stock trading. Many of them, in fact, all of the indicators that we use in forex, they've got a lagging element. It means when you get the signal, price has already moved or price has already done whatever it has done. So sometimes it's a good thing, but sometimes it's also a bad thing because it means you are only joining the market when the market has already moved. So the whole point of trading without indicators is to try and avoid those things. You enter the market earlier. You also have the advantage of somewhat predicting what the market will do. Indicators cannot predict what the market will do because indicators only reflect or calculate historical data. They only reflect or they calculate historical data, things that have already happened in the past. So you cannot rely on indicators to give you signals of what will happen in the future. So basically that's the gist of this next series of videos. I'm going to show you how I trade without indicators. This approach is mainly for people who are not scalpers. I used to be a scalper myself, but due to time constraints, I just stopped. I can no longer do it. Scalpers, I respect them, but for me, it's no longer a preferred style of trading because I can no longer be on my charts every second of the day. I have many other things to do. So nowadays, I prefer to call myself a forex investor and not a trader because I'm not always on the charts. So what I basically do is nowadays I look at the charts on higher time frames and I can tell the possible direction of the market at least a day or a few days in advance, and I place my trades, and that's it. And I wait after a few days. I come back and see whether I'm in profit or whether my stop loss was hit. There are only two outcomes in forex. You cannot avoid that. It's either you are going to be in profit or you are going to lose. Those are the two outcomes in forex. So this strategy obviously doesn't require indicators. Going to be using is support and resistance. I know many people will tell you that support and resistance doesn't work, but this is the simplest strategy in Forex, support and resistance. Personally, I found that it works nearly 80% or so of the time, depending on how you trade it, because you probably notice that price has a certain behavior. Price has a certain behavior. It repeats what it did previously. Price just repeats what it did previously. That's the beauty of support and resistance. Some people will use horizontal support and resistance, and I know some people love to use trend lines like so, which is still support and resistance. Uh, let's put it like that, or we can put something like so. However you choose to skin this thing, whether you are using trend lines or you are using horizontal support and resistance lines, is still the same basic concept of support and resistance. It relies on this concept that price will always act a certain way once it reaches certain points. There is this psychology that traders have when they see price reaching a certain point, and you can search for this thing way back into history. I'm using a daily time frame here, so you can go back into your historical data and you see price bouncing off those same levels all the way back into history. So you don't really need to crack your head with some of these things. Some of the forex strategies that are actually making people a lot of money are the simplest approaches to forex trading. I think the problem with us is we do not always believe in a simple thing. We want to take a simple thing that works and we want to try and complicate it. That's why people are failing in forex trading. We want to take a simple concept, a simple thing, a simple approach, and we try to add the curries, the chilies, we want to add the garlic, we want to add, in the end it becomes this complex thing that you cannot even understand how to use it. But with simple support and resistance, with an understanding of simple support and resistance, you are able to capture hundreds of pips. Hundreds of pips. Let's take an example here. We are on card JPY. How much pips was this? 270 pips. There, 270 pips there. Here, you could bank 245 pips. 245 pips there. And here, you could bank 364 pips. And all that you are doing is trading support and resistance. Whether you are trading with trend lines or whether you are trading using horizontal support and resistance, it's all the same. It's all the same. You do You did not need RSI, you did not need stochastic, you did not need anything here, and you banked nearly 355 pips. No complex algorithms, no complex indicators, no moving averages, no nothing. If I were to add moving averages here, let's look for moving averages, the common ones that people use. Many people use the 20 exponential, like so, against the 50, against the 50. Change color to something like that. Okay, and this is on a daily. This is on a daily chart. So this is daily candles. The person trading moving averages would have waited to enter the market here. That is some 100 pips. And there would not be a guarantee here that price would continue going down or price will bounce back up. But the person who entered support and resistance without indicators entered here already. They were in the profit some 172 pips already before the guy who is trading with moving averages entered the market. So from this short demonstration, you can see that price action with support and resistance, it wins the day. You enter the market earlier and you are in the profit earlier than people who are relying on lagging indicators. So that's basically some of the things that we are going to be discussing in the next few videos, discussing the simplest ways to make money in Forex. This anyone can do. This you can do, and you will not need to stay at your charts for 12 hours a day, 24 hours a day. You basically come here, this is on the daily, and you're going to rely on the 4 hour as well. You are basically going to rely on the daily and the 4 hour. I sometimes go down to the hourly, but that's sometimes. So as you can see here, price was struggling. Price was struggling to go up here, was struggling to break the resistance there. That would have told you that price is likely to drop, and you would have probably waited for a candle close and placed your either your self stop or immediately entered somewhere around here, and you simply walk away from your charts. When you come back, your TP is already set somewhere here. When you come back, you are already 279 pips in the bank. So you again enter here, and the next major support or major resistance is your take profit. So this is a simple trading strategy. Maybe somebody will say, pick another pair. I'm not intending to make this video too long, just an introduction. So here is where price is at. We find another level there. We find another level. You are looking for the obvious levels of support and resistance. I was going to put another level there. When you go back, this is June 2019. Look, from 14 July 2020 all the way back to this is 11 June. This is 1 July. This is 15 January this year. Sometime in December. Sometime in December. Is it coincidence that price came to this level and did something? Is it coincidence that price came to this level and did something? That price here, it doesn't mean that because price has come to this level immediately it's going to drop. Of course there is a possibility that price now has come here, it's going to drop, but there is also the possibility that when price breaks out of that level, it's probably going to shoot up, but it's not going to just shoot up because we know price moves around in zigzags. You have push up, you have a retracement, you have a push up, you have a retracement, another push up. So price, it doesn't move in a straight line like that. Most likely if it breaks up, we are going to watch it close above the level and we are going to wait for it to retest because that's what price does. And once it shows signs that it's not dropping below that level, that it wants to go up, that's when we enter. Some people will just jump in here. Some people win, but most of the time people will lose because price will just simply do this: break up and trap everyone here. The line that I was looking for. It's going to trap people who bought here and their stops probably here or wherever they chose to put their stops. It really doesn't matter because the people that bought here hoping price would go straight up got trapped and price came down. That's what it does. So you are going to be patient. You need to be patient to wait for confirmations when price comes to these levels, which is some of the things that we're going to discuss in this new series of videos. When price comes to these levels, what do you do? How do you enter? Where do you put your stop loss? Where do you put your take profit? And things like that. Ideally, you would want price to close above the level and show you signs that it's indeed bouncing back and going up, or that it was just a fake out. We call these fake outs. That they are just meant to trap people on the side before price comes down. So it's some of the things that we are going to be discussing in the next series of videos. But yeah, it's basically the how to trade the markets the easy, simpler way. No need for indicators. We are taking all the indicators of our charts, and we are going to be trading to make money.